All right, hey everybody, this is John. Welcome to the free video. So what am I looking at here? Especially I've been out for a couple of weeks, which has been fun. I'm going to tell you more about that, which was a pretty awesome trip. Keep in mind, this is the 10-day moving average of the put-call ratio, and it's good for extremes. If we get up here, we're too bearish. We usually get a bounce, okay? Up, too bearish, we usually get a bounce. Now, usually I've used 0.75 as my too bullish level, but you can see what's been happening is that it's actually coming more in line around 0.80. So 0.80, too bullish, boom. 0.80, too bullish, boom. And we're kind of getting close to that again. So this is interesting because right now we got a very strong trend, but we've got a couple of things coming up. And if I do see this come down to 0.80, then I'm going to start looking at some potential shorts in the market, i.e. just buying some puts and some things like that just based on this. I mean, this is just an indicator that tells us, are people too bullish or too bearish on this market? All right, so what else am I looking at? I was looking at Intel, the earnings that came out. We closed at 31.60. I mean, it wasn't, I think the expected move on this was fairly reasonable. It's a pretty predictable company. Expected move was $1.40. And you can see after hours we're down about half of that expected move, but it is to the downside. And after today, where Netflix semi-imploded, it's kind of interesting. It leaves the NASDAQ kind of wondering, well, what happens now? And of course, we were looking at that put-call ratio earlier, and if everybody right now is betting that the market's going to move up big, is that kind of a recipe for at least a little bit of a sell-off? It doesn't have to be a big one. I don't like fighting trends, and right now the trend is higher, but keep in mind, okay, we do have an ascending wedge here, and we are right on that trend line. Okay, an ascending wedge is bearish if it is broken. So ascending wedge, if you guys don't know what that is, it just starts wide at the bottom, gets narrower, and then at some point, if it can, it breaks to the upside, then it's done. It's like, okay, it's not going to be bearish. But if it breaks to the downside, then, at the very least here, I'd look for a retest of this, but it could actually lead into something, pretty hardcore. I was looking for the last one here. So you can see here on the weekly chart of the NASDAQ, this was the wedge. It started at the beginning of, to end of 2014, came along, got narrower and narrower, and then when we broke, you can see how big it broke. Now, we eventually came all the way back, okay, and that's fine. But the point is that you don't want to just sit there 100% long and this pattern breaks, because the sell-off, nobody wants to hold through that. So I would just be very, very cautious here on longs, and you want to be able to follow these markets and make sure you're getting the right signals, right, to make adjustments. All right, one cool thing I wanted to show you is many of you know that we've got a scanner, and this is something that we just kind of built by request. For people that just couldn't do, some of the stuff I'll do like in Radar Screen, in TradeStation, other stuff I'll do in Thinkorswim, other stuff I get from other sources, and this is just a way to kind of combine all that into one. And we, for a while, have had some great scans here, which some of you are familiar with. I'm going to go through them real quick and then show you a new one that we just added, which is pretty awesome. So while these daily scans, like the daily bullish nested squeeze, the pop squeeze candidate, those are awesome. That's the high short interest with a squeeze. We've got weekly scans, the intraday scans. I love the 195-minute bullish and bearish continuations. We've got the blueprint that has your growth 250, meaning kind of the fastest growing, smaller 250 companies, top rated stocks under $10. This is updated every week, combining fundamentals with technicals. But we got now MTFA. And this is, I wanted to, with David's help, put something together that I don't have access to. Okay, now this is going to be a little confusing at first, but the overall idea is I wanted to be able to glance at the futures and my favorite stocks on multiple time frames, okay, multiple time frame analysis, and get an idea of what the trend was and if there was a squeeze. Okay, so if there's a squeeze, well, let's just go colors. Colors is strong downtrend, red strong downtrend. You got medium downtrend, weak downtrend, neutral, okay, weak uptrend, medium uptrend and super strong uptrend, okay? If there's a squeeze in there, then you've got a little rectangle if a squeeze is setting up. Otherwise, you're just going to have the arrows, okay? Hey, there's no squeeze. And then if the squeeze has fired, you're going to have arrows. Now, at first glance, this may look kind of complicated. We will continue to work with it and continue to simplify it. But I actually like it like this now that I'm used to it. So what do? You come down here and just say, okay, for the futures, I can just sit there and say, and by the way, this updates real time. Or at the end of every 15-minute bar, so you can refresh it. I can just sit there and go, what should I be trading? Well, gosh, there's a squeeze that's fired on the daily chart on the Aussie dollar, and the 4-hour chart, and the hourly and the 30-minute charts are in strong uptrends. I think I'm going to buy me some Aussie. Okay, here's oil. Gold. I mean, gold has a squeeze on the daily chart that hasn't fired yet. Okay. But the 4-hour has fired, and guess what? Typically, when the 4-hour fires, that rolls into the daily. All right, and you can see we got a pullback here on the 15-minute chart. That means it's time to get in. Okay, on this stronger trend, which is pretty great that way. And we can scroll down here, and we got the yen, 10-year notes, Nasdaq, 30-year bonds. Okay, great. Well, then we scroll down, and I kind of added my favorite trading stocks. So now I can just kind of go down and say, all right, Amazon. Wow, Amazon's got a daily squeeze that's fired. The 195-minute and the 78-minute are bullish, but the 39 and the 15 are neutral. That means, you know, that they're not bearish, but they're not bullish. They're just neutral. Great. Okay, let's go take a look at it. Or I can come over here and say, wow, look at Priceline. Priceline's got no squeeze, but there's a strong uptrend on the daily, 195, 78, and 39, but it's bearish on the 15-minute chart. Well, guess what? That's buying a pullback, okay, in the middle of a strong uptrend. So anyway, the list goes on and on. This dashboard I found is super useful for being able to sit there and find those high probability moments in time. Instead of, like, you know, staring at a stock and just trying to, like, think of a trade, just wait for these things to come together, and those are your action steps, all right? All right, so one thing I want to tell you about that's fairly important. Right now, the scanner is incredibly reasonably priced at $47 a month. We're going to continue to expand it out. We are up in the price to $79 a month. If you want to lock in the $47 a month, and you're looking at this right now, then you want to go to this page, simplertrading.com/scanner, or this video will redirect to it and sign up. Once you're in, you get to keep this price unless you cancel. If you cancel and you want to come back, guess what? It's going to be $79. But we are upping it up to $79 because we continue to add more tools. All right. This is a scanner that I use. We're going to continue moving more and more things to make the scanner more and more powerful, and it's just a way to, you know, kind of lock in that price. All right. Hope it helps. You guys have a great night, and we'll see you in the room tomorrow.